Want to switch gears? Check out shares of Dell right now. Take a look at this chart. Shares are moving higher after beating estimates as its server sales soar by 80%. Investment committee member Bill Baruch, he owns it. He joins us now on the phone. Bill, coming over to you.
This was a great report. It's everything we needed to see. You got the double beat. You got the forecast raise. Most importantly, there was some concerns about margins. You go back to the prior report, and there was some significant margin improvement here in the ISG segment, the Infrastructure Solutions Group, which then holds the AI server subsegment. So this really eased some concerns. That AI server subsegment, as you mentioned, 82% quarter-over-quarter growth. But on top of that, the balance sheet, it's in the best place it's been in some time, and they're in a good position to return capital to shareholders. We really, really like what we see here. And this is what I've been looking to see in order to add to the name. I think on this wave higher, 123, and then we could see 134 in the name down the road here, maybe before the end of the year.
All right, so Bill, you got a full head of steam on this one. You mentioned guidance, but you're talking about the full year guidance. What about that current quarter guidance? I'm looking at the EPS guidance, $2 plus or minus 10 cents. The street's looking for $2.17. Not a concern at all that their guidance is well below estimates for the current quarter?
You know what? I don't see that as being a large concern, mostly because the margin improvement was the biggest concern. What this ultimately does, too, I think as the bigger narrative, it bodes well for the overall health of the AI ecosystem, and which also signals a positive sign for a lot of the holdings that we currently have. I mean, you talked about Marvell, you talked about Broadcom. I mean, there's a lot of names in here that can really kind of feed off of the positive move and the positive report that we're seeing here, especially within that margin improvement. So I'm very encouraged by this.
So very encouraged by this. Obviously, server sales very encouraging. What about PC sales? They're also forecasting a rebound when it comes to PC sales. A lot of people have been forecasting that for a couple of quarters, the idea that AI PCs are going to reinvigorate that part of the business.
I do like that. I think that overall, we've seen going back to last year, the bottoming out of the memory segment. We've seen some really good positive momentum coming out of that. But now as you get this update cycle with AI-infused PCs, I think that's a really good tailwind heading in through 2025. And I expect that also to help carry the stock and carry the name from revenues as well as momentum from a narrative standpoint in through 2025.
All right, still a wait and see when it comes to those AI PCs, but shares of Dell up just about 5% right now. All right, Bill, stick with us. We're also watching Intel. Shares are higher on reports. The company's evaluating strategic options. Our Seema Modi is here with that story. Taking a look at shares of Intel right now, Seema, up over 8%.
Yeah, it's a big mover, not just today, but yesterday as well. On this report that Intel executives are looking at strategic options that could potentially include splitting out certain parts of the business, foundry specifically. So that has helped shares outperform, and it's something that the Wall Street is watching closely. According to these reports, advisors have been, including bankers from Morgan Stanley, working with Intel on looking at some strategic options, which looking at the value specifically around foundries is what they've been debating. And I think it's something that is allowing the stock to outperform here because given the earnings report earlier this summer where the company announced that $10 billion cost-cutting plan, there's been some real concerns about the health of this business, CEO Pat Gelsinger's overall turnaround plan.
All right, Bill, going to come over to you. You are an Intel shareholder. Your views on some of these announcements, Intel trying to get ahead of some activist investors, doing some cost-cutting, laying off some people. Your view on the stock and also the business.
Well, unfortunately, we are not an Intel shareholder. We did dump this name after that poor report. It was in the bottom of our holdings. But, even today, up 8%, it's trading where it opened that day after that report. I think this is a very cost-intensive business, and they haven't really begun to see the reward coming from government subsidies. So I think right now, by splitting this business up, yeah, there's going to be a tailwind of sort of the positive shakeup. Again, this is a very, very tough business to be running right now, and I'm not sure that you have enough leadership that is taking each segment into the place that it needs to be. So again, we're not a shareholder right now. I do like to see some of the positive momentum that could come from this restructuring, but I'd like to see more from it, not just one day in some news right now.